Hello and welcome everybody. Here's the Algo 17 just to give some ideas. This is the Algo 17 Extreme. I'll just share with you a couple things. When we hit format on this particular model, we've broken down a few important items. First and foremost, we see that buy signals have a slightly lower risk reward ratio that's optimized than sell signals, and the time frame of the moving average, it actually asks for on a 60-minute a 7-period MA, which gives better confirmation versus the sell signal confirmation, which is interesting in my humble opinion. Also looking at the difference between high close and low close dojis, their risk reward, and we found that using the moving average component was a little bit better than using the last conditional change breakout method for at least trading this particular product, which is the leveraged ETF on the S&P 500. This is SSO. That's why I just underlined SSO. Now what you're looking at here on your chart, this is a 60-minute overnight day trade, swing type trade program, and down below we have the on balance volume indicator. So pretty much, I mean, you could see that when we have a buy entry and it gets out, you see that the blue line signals when the trade got entered, when the trade got out. This also defines how it got out. It got out on a trailing stop function. Red lines signify losers. Losers up here are very small and tiny. We've seemed to have both sides of the trade. We've missed a couple of them right up in here, missed these breakdowns. It's not taken every swing in this incredibly violent move that we've seen. And one of the main reasons is purely because of perhaps some of the other filtering elements like risk amount per trade. If the risk is too great, it won't take the trade. So it will miss certain trades. What I find interesting is that right now, based on last week's recovery, it got long, it held the position, and now it is absolutely short. So what's the moral of the story here? With the SSO now being short in this current trade position, it makes it unlikely, obvious, for spiders to rally. With the overall pressure in the market coming from FANG stocks, you're probably familiar with the Facebook debacle, Amazon, we'll get to that in just a second. In fact, I'll just jump to that right now. Let's take a quick gander at some of the watch list we have. We have Apple down $7 today. We have Amazon down almost $80, $78 to be exact. Ironically, Verizon's up, as is Tesla. But the real culprit, the real story of the market here, and we'll get this alphabetically going, is Facebook down $8. That's a major disaster for most portfolios that may own Facebook, especially the new millennials. How much lower can we see Facebook going? Quite frankly, we could get the market back to where we were back in late 16, which puts us in the 120, 125 handle, somewhere down in there before we see a turnaround. None of my longer term indicators. Here's my specialized volume indicator. Again, this is a monthly chart though, right? None of my longer term analysis suggests that you catch this falling knife, yet my short-term support on Facebook will come into play at around 125 is the next stopping point. What does 125 represent? First, it represents the person's pivot, those green dots right there, 125.38. 125, if we look left to our charts and we draw a straight line over, we'll notice that 125 is also an area of old resistance, old support. It was old resistance, and then it broke out. So we're more than likely the support resistance areas like that, especially from historic perspective, longer term, they're kind of like magnets. They like the markets attract to them. So we'll see if there is, at this point, the person market catcher, the relative strength indicator is still in a negative mode. Looking at the histogram component, it was showing a potential convergence pattern, but doesn't mean much. It can still move lower. And the volume is signaling, at least on a weekly basis, that it's still in a solid downtrend with significant selling pressure. So I don't know if the capitulation is in yet, but I think that if anyone was looking for the near-term support on Facebook, you got that pivot that you can lean against as it corresponds with old price points of interest. Namely, one thing that's pretty unique here, gang, is notice that over here we generated a weekly buy signal right into that zone. So what does that zone represent? The last time we had a buy signal was right there, and that's where the market's more than likely going to want to test before it, finds its footings, so to speak. So that's looking at Facebook right now. That's a weekly outlook on Facebook. Let's take a look at the daily charts and see if anything's really improved. Now, the funny thing is, looking at the daily charts, and I want to reveal this for you guys, is that we're close to that 125. So, I mean, is this a capitulation low? Well, the irony is that my volume indicator is still making consecutive series of higher lows. It hasn't turned up yet. This is a specialized volume indicator. This is the person market catcher relative strength. And it is now showing a bit of convergence, meaning the current reading of the PMC is still higher than when prices were up here back in late August. So this is kind of telling you that we're near oversold conditions. It's also suggesting that, we're coming close to longer term support in the market. And as we get closer to that number, I think you're going to start to find buyers step in. I mean, after all, the stock was probably not worthy of being bought at 200, 210 level. And the person market catcher was certainly suggesting not to do that. The market was way overbought. We had divergence. These indicators were headed down and the price action was heading up. That's divergence. So we now had divergence sell signals at the top, and we're now getting convergence patterns. And this presents us with the idea that near-term daily charts were coming to maybe a short-term interim low. The weekly chart suggests there's higher degree time frame support coming into the market. So I just wanted to throw that out there for you guys. If you're interested, what would that mean for an option trader? An option trader could start looking, and at least rather than catch the falling knife and missing, or if you waited for a daily buy signal, you could miss a lot of great opportunities. My suggestion is to watch and look for buy signals and see how they develop on a 60-minute intraday time frame. First, let's see if we can get any kind of a 60-minute buy signal either through the course of Monday or Tuesday and get buying interest. If there is buying interest, it should start to show up in the volume action. As it is right now, the 60-minute on-balance volume indicator is showing some pretty significant selling pressure. My volume indicator is showing significant selling pressure. So that leads me to believe that there's probably a few more bars, which would be in terms of 60-minute time frame, at least 5 to 6 more trading hours worth of maybe some downside pressure before we see an upside reversal. And so therefore keep focused on 60-minute PPS buy signals. And then at the least, you would want to say, well, gee, if this market's capable of reversing, shouldn't we see the buying pressure step in and be reflected on a shorter term than 60-minute? And the answer, sure. We should start to see maybe 60-minute and 15-minute buy signals populate. As it is right now, stock's at 131.79, and we still have no buy signals on a PPS with a corresponding confirming volume pattern, meaning if the stock is going to go down, I would like to see the volume move up. That would be what? A bullish convergence pattern. Or if the market price is going down and bases out and starts to maybe move a little bit higher, I'd like to see that volume move up, confirming there's a support in the marketplace. So far, we don't have that yet. All we have is a change in the momentum of the volume. That's my specialized proprietary volume indicator, but we don't have confirming evidence in on-balance volume, nor do you have a PPS buy signal. So that's the first thing. If you're looking to pick a bottom in the market, then use we know we're probably overstretched on one side of the downside here. We know we have longer term support at this 125, 126 number. We're pretty close to it. Maybe we're going to start to see some scale in institution buying, picking up some stock here at 130 area, but we'd want to see that those buyers present in the form of a momentum shift indicator with the PPS arrows and accumulation in volume. And so far, we don't have that. Now, on my radar screen here, this is some of the things that are for me that I like to look at are relative stocks that are in outperforming the market from a relative strength perspective. Anything that's bright blue is outperforming the market. While the price might be down, the relative strength means that it's not going down as much. It's outperforming the overall market. So some of the stronger numbers here, these bright blues, we have a regional bank, PNC. It's obviously down, but not like the S&Ps. PNC, if you look at this daily chart, it's not even testing the lows of the white line in the sand, which would be a strong support to lean against on buys. Looking at another one, let's take a look at Cardinal Health, CAH. Cardinal Health, too, just hits blew through support the other day, but it's well off its lows, so it's still outperforming the market. This is AbbVie, an offshoot of Abbott Labs. You guys remember it's been in the news a lot this year. It's had ups and downs, as you can tell. One thing that I like about this particular stock is that the relative strength did improve. Even though the stock is down right now relative to its prior day's close, its relative strength versus the market is showing signs of strength. And institutions look for those types of clues. Also, the recovery over the last 2 weeks has been on some pretty good, strong accumulation in volume. So AbbVie is one to watch moving forward. There's a couple other ones, AMZN. A lot of people are interested in what does my work suggest for Amazon, for example. Several weeks ago, we put out a buy the D17 calls, and that turned out to be a pretty decent trade recommendation because the market had been overstretched when it started to decline. And the volume histogram component was showing convergences. So we felt that low down there coming back into old support areas was important, and we did get a recovery. Now the market's coming back to test that low. So here's the question. Is this worthy of getting back in a second time at the same place? And I'd have to say, until I get better evidence, the answer is no. Currently, I have a weak volume decline, but that's not enough to take action on, especially if this is the second retest. We did fill the gap, which is this price action where one day gaps higher than the prior day's high. So the low of one day is higher than the high of the other day, and it leaves this hole on the charts. It's a price gap, right? Markets like to go down and fill the gap. So the question begs, is this a double bottom, right? A double bottom forming with this being the primary low and this the secondary low? Is that a double bottom pattern where we could see a bounce right back again? Or is this getting ready for maybe just a recovery and a further break? Well, I don't have that answer yet because it's still going down. It hasn't gone up yet. So I would look for here the same situation. If we're going to see recovery in Amazon, then the first thing I'd want to do, and we're starting to see it right now, is stronger relative volume on a decline. What is relative volume? What do I mean by that? This low was taken out, but relatively speaking, the volume was not weaker. So that means that this particular low is a potential convergence pattern. And now that we have a 15-minute buy signal, if we start to trade a little bit higher and get a couple more bars, 2 to 3 more bars, and close over that 1535, and I'll share that number with you right here, you can clearly see that white line in the sand. That's a last conditional change. That would be right there. If we get back and close over that line in the sand, I would be more impressed, especially if we start to see better volume accumulate. And I would feel very happy about getting in, even though this did make a lower low. It made a lower low on lighter volume, and that, my friends, is a better setup moving forward. That's when I would probably initiate and try to put on a near-term bull call spread. Traditionally, as we head into the Thanksgiving weekend, the day before Thanksgiving, the day after Thanksgiving are strong recovery days. There's a lot of talk about many times as far as the midterm elections, which are over, also presents buying opportunities in the midterm election cycle. So, this is a little bit different dynamic than in history because of how much the market has rallied since the 2016 election. Many of these stocks, even Facebook, Amazon, are still parabolic, and the rate of pace of change in which they advanced over the last year. Keep in mind, where was Amazon just a little over a year ago? Just a little over a year ago, the stock was trading at 1,000. So, I mean, even with this big pullback that we've experienced, the market is still up 50% from a year ago's price level. That's what I'm referring to. Where is price? In order to figure out where a market might go, we got to ask where it's going. So before we say, hey, this thing's going down to hell in a handbasket, we're at support. We have some evidence that suggests we could recover out of here. I would just say, if we are going to see buyers step in, it's going to start to show up on the 15 and the 60. And as far as our Algo optimizer and looking at the SSO, if this thing, which is now, as I said, short a position, if it flips from out of that short to long with this type of volume action, that is extremely healthy. And as you can see, even with Amazon, here's another little pattern. Is this a W bottom pattern? Well, I can tell you this. We'll have better confirmation if it closes greater than, and X means a close, closes greater than that yellow line in the sand. A close greater than that line and a close greater than that swing high. And we're going up, man, and probably we'll go back up to test that 127. On the other side of the coin, if we do start to see continued failure, meaning lower highs, lower lows, we take out the swing low. And in this case, I don't want to see that swing low get taken out and corresponding volume breakdown. If it does, this is probably what we would say is an A, B, C, and then D wave measurement. Take the measurement from here to there, add that distance to C, and then you could project down. That would be your profit target down in there. So are we in an ABCD down wave, or are we in a double bottom pattern? And it's hard to tell when you're literally, gang, between a rock and a hard place or midpoint of the swing high and the swing low. So I think short term, we want to look at the 15-minute and 60-minute on equities to see if they do bounce out of here with corresponding volume, and that'll be our best clue. When the systems go actually flat and then reversed along, boy, that's going to be a very powerful reversal buy signal. As it is right now on Algo 17, both SSO and spiders, we are both short those market signals. So with that said, we could see continued breakdown, but what's neat about this particular system with the Algo optimizer, it already has a built-in profit situation from a trailing stop, and if it generates a buy signal, it will reverse out in a heartbeat. Now this is for like day trading models, right? So if you're a long-term trend trader, then this is not your business. Your business is getting a defined trend. The market's not in a defined trend right now. I just illustrated it's stuck between the rock and the hard place. This is a short-term trader's dream with increased volatility, and a short-term trader's dream should be what with this volatility? Reduce your holding periods, number one, and B, you probably have a reduced position size because these dynamic swings that we see in the market, when I say dynamic swings, in a 5 or even a 2-minute period, we're seeing 5 and 7 point S&P point moves. That's anywhere from $250 to $350. I don't know if you want to remind people, I said that's within 2 to 5 minute time period. If you remember, October last year, we were in a 9-handle daily range. Now we're in a 7.5 minute range. So here is one of the things that I think that's maybe holding back investment dollars, just my 2 cents, and we'll wrap this up, is that the average true range right now, if we go over here and look at your ATR in the S&P market, your ATR right now is at 52 points. Today's range is 64. The other day it was almost 100. I mean, so until we see that volatility or average true range start to contract, bigger money, trend following traders are going to probably stay out of the business because this is short-term trade models in its finest. So with that said, you want to have your Algo optimizer programmed for either what you can 60-minute is too much. 15 might even be too rich for many people's blood. You want to have like maybe your 30-second models. You want to have your 2-minute models. It's shorter term for day traders. And I think that would be more than sufficient to get those programs moving to reduce your exposure to risk. Remember, if it's a short-term model, you got to have short-term horizon trades. So far, we've got some pretty decent trades off of this movement. Currently, short, it's flat right now. So even our 15-minute model is flat, took a profit. So that's kind of cool. Incidentally, last but not least, I gave this out in the morning briefing this morning, 27.48, 2 60-minute closes greater than, positive, greater than, 27.48, 27.48 improves the odds, increases the probability that the market has bottomed out and is ready to rock and will test 27.80, 90 here handle. We need 2 60-minute closes greater than 27.48, and we're back up to 27.90 to 28 even test. So watch for that. It's been a long time that we've been testing that 27. Some people say it's 27.50. The real number is 27.48 and a half. Thank you all very much. Sorry to take so long. And don't forget, we are doing our customer appreciation webinar Tuesday. That is, again, this week. If you see this, it'll be Tuesday, November 20th to help us prepare for what's ahead. Friday, Black Friday trade session. And is, again, Monday, Cyber Monday. So we'll be looking at a lot of retail stocks and going through scans. I can't wait to help you learn how to better use the trade station and Thinkorswim signals from John Person and Person's Planet. Thanks, everybody. We'll see you at the next event.